Hi, this is Scott Murray, and welcome to the Daily Economic Market Shout for Tuesday, January 31st, 23, I should say. We got the first month done. What did we get? We got confidence today. Yes, we're having a decline in overall confidence. Expectations are weighing on the market, but current events, current situations, is actually the assessment is higher. Why is it higher? Excuse me. More people believe jobs are plentiful instead of hard to get. And that's the major number that we look for under the confidence reading from the conference board. That tells us that people likely, and we see it in the spending expectations, will continue to spend. 11% of Americans still expect to get a car in the next 6 months. Now leaning a little bit towards used over new, but that's an elevated number. 6% of Americans expect to buy a house. With the housing prices we've seen, that's a little bit of surprising too. So yeah, recession, inflation are worrisome. Consumers looking ahead don't expect to have as much income as today, but they actually seem okay with it. And even though it's moving the overall reading down, the split becomes larger between current and expected, and that usually weighs towards the current environment. People a little more concerned, looking out, and the realization of that may not come to fruition. But we also got housing, and I mentioned the 6% of people willing to buy a house. We did get a fall in housing prices, a little bit under 1%. However, when we look at the West Coast, we see declines of almost 1.5%. And the bifurcation between markets is still very strong. Miami up almost 20% year over year. San Francisco down 2% year over year. In the middle, we see sort of the mixtures of the states, but mostly on the bottom is the West Coast. These are other areas like LA, San Diego, even Phoenix getting into it. On the upper side, we still see Southeast, which is just not Miami, it's Tampa, it's Atlanta, and even a little bit into Dallas. So yes, Southeast is the beneficiary of what we've seen over the last 3 years, and that's keeping prices healthy there, even though the rest of the country. So we're still in this new world of how does the market react? How do the individual locations take advantage or lose out to the work from home? And we're still seeing that dynamic playing out with the Southeast being the winner. So decent news in terms of the economy. We start then as February approach, looking back on January for the employment. That's going to be center stage today. In the employment index, we saw readings that told us that healthy gains in healthcare, healthy gains in education, those are continuing to be strong points. That sort of suggests that demand is still very strong there, and we've seen that in the JOLTS number, and we're probably going to see it in the employment number. So what is keeping this employment number so healthy? It is those categories: leisure, not as much; retail, not as much, but education, healthcare, and even informational services is doing pretty well. And in a sense, these are higher paid categories, so they'll probably give a little bit more boost to the wage number. This is Scott Murray for the Daily Economic Market Shout. Thank you for joining me.